Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on day trading and the Trading Zone Live. He's going to be covering topics like the psychology of day trading, why some people find it difficult to day trade. He's going to share with us what the Trading Zone Live is and what he does there, the indicators that he uses to day trade and why they work, examples of setups using the Trading Zone Live, and how to start day trading with a small account. And from the mailbag, he's going to review the StockFetcher A-line example that he gave last week. And many people wrote in and said, hey, could you share that with us again? So we're going to go into the mailbag on that one. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, folks, the chat is open to everyone. So remember the ground rules. Always be kind. Keep to the topic. No political discussions at all. Keep side conversations to a minimum so that we can all focus on the education and information that Roger is here to share with us. Because, folks, he's here to give us an edge and to help us all become a little bit more confident and consistent in our trading. Now, this morning at 8 o'clock, Roger greeted us as he does every morning with his pre-market analysis. And he shared with us a small cap watch list. And I'm going to put that in the chat panel for all of us to take a look at in the event that you may have missed those. So I'm going to post those for you right now. And looking at the ones that were there and looking over at my charts right now, it appears that ARBB is one that might have worked out fairly well for you. The entry point would have been $10.70. That was the pre-market high, and it's currently trading at $13.21. And I know Roger will talk a little bit more about that. Now, remember, with these small caps, the key to his selection process is price action and extreme volume. And remember, folks, that small caps are immune to what's going on in the broader market because largely that volume is driven by retail traders and not investing companies. And you always want to look at these opportunities during the normal market hours. And if you don't see that entry before 2 p.m., don't even think about it. These are trades that should happen early in the session after the pre-market high, and never hold these things overnight. As far as Roger's catalyst for the day were concerned, and you know what catalysts are. This is information that's either known or will be known during the trading day, but is not yet priced in the market. So on the Fed side, there are several FOMC members that are scheduled to speak today. Crypto, with Bitcoin prices breaking down, it had a broad-ranging effect on crypto stocks. He also said, guys, keep an eye on chips and consumer staples. Now, as far as Roger's daily watch list is concerned, stock watch list is concerned, he had several shorts and longs, and I'm also going to copy these and post them in the chat panel for you because Roger always likes to do a midday update on this. But you will see that there were several on the shorts, several on the longs, and he always caveats that by saying, folks, if you like any of these stocks, just be absolutely sure that if you're taking a short or you're going to be buying puts on these, make sure you have a clear-cut breakdown. And for those that are looking long, make sure that you have a clear-cut breakout before you're looking at those. Now, for his closing comments, he said, look, guys, Monday is typically about consolidation, especially early in the day, before noon. And he saw no example, no reason that today would be any different. He doesn't like the market, folks, because he sees some warning signs. The mags continue to be overextended along with the QQQ and the SPY. So the blue chips and the mags are driving the QQQ and the SPY, and he feels that that is an artificial level. Bonds were moving lower. The VIX was starting to creep just a little bit higher. And the RSP and the QQE were all receding a bit. And he also spent a fair amount of time talking to us about the call put ratio at below the 0.70 level, meaning that calls are getting ahead of themselves, and it looks like the switcheroo might be in, where there's a shift around in that. And he shared a very telling chart with us about that. So, from his perspective, he says, guys, you can't ignore the fact that there are several things that are pointing to a coming sell off. And the question is, where will the money go? Is it going to go back into cash? Is it going to go into gold? Or, as he hopes, is it going to filter back into the broader market? And do we see the RSP and the QQQE start to rise from that reinvestment? And lastly, on today, he said, folks, look, this is his direct quote: don't let FOMO get in the way of getting a great stock. Be patient. If you see a good entry this morning, just wait. A better entry is coming. And I thought that was sage advice from Roger. So anyway, we're going to be getting started in just a minute or so. And once again, I want to remind you that today's agenda is going to be all about day trading and the Trading Zone Live. Roger's going to share with us the psychology of day trading and why some people find it difficult to day trade. He's also going to tell us what the Trading Zone Live is and the kind of things that he does there. He's going to tell us about the indicators that he uses to day trade it and why they work. And he's going to give us examples of setups using the Trading Zone Live and how anybody can start day trading with a very small account. And from the mailbag, folks, he's going to review the stock fetcher A-line example. This is something that he shared with us all last Thursday, I believe it was, or Friday. A number of emails came into him saying, hey, Roger, could you run through that again, how you use stock fetcher when looking at A-lines? And so he is going to do a quick review of that. Now, if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, that the chat is open to everyone. And remember that we have ground rules. Always be kind. Number 2, keep to the topic. Number 3, no political discussions at all. Number 4, keep the side conversations to a minimum so the rest of us can focus on the education and information that Roger's sharing. Because, folks, he's here to give us an edge, all right? And to help us become more confident and consistent in our trading activities. And with that, folks, let's say hi to the man himself. Roger, good morning. How you doing, buddy? Good to see you. Matt, always great to see you as well. Happy Monday, Raj.
Happy Monday to you as well. How are you doing today?
I'm doing super. Had a wonderful weekend. My football teams won. My grandkids are excellent. And it just kind of set me up for a really nice beginning to the week. I always come back refreshed when you put those 3 things together.
Yep, those are great things. This weekend I actually had a chance to relax. Last weekend was just a mess. We had like just a million different things going on. And this weekend, we didn't really have much going on, so I actually had a chance to chill out and hang out and have a good time and sleep a lot. So and sleep a lot. And I'm not a big sleeper, but on the weekends I sleep. I take my naps and all that. I guess my body just needs it, and I do it. And Clyde was happy, baby Louie was happy, Bonnie was happy. Everybody was very happy. I saw my 2 out of 3 of my kids. And everything was well. Also, let me tell you something else, Raleigh. Yeah. I asked Matt. Well, we'll go through this a little later today, but I wanted to show people some really interesting stuff, and we could talk about this later. But I wanted to show you this. So one of the things that I always tell people is, one of the most important things that I always tell people is, you can't look at numbers unless you have a good amount of numbers. You can't look, I always say you can't trade the individual trades. You got to look at the bigger picture. You got to trade the number. So we're doing a webinar later today. This week is all going to be about day trading. I'm going to talk a lot about day trading this week and teach you guys a lot about day trading, including today. So you guys are in the right place at the right time. But I wanted to show you something interesting. And we're this week we have somebody that's going to put this into Trading View. Let me show you this. This is the spreadsheet. This is the performance. Here's the spreadsheet. You can actually see it right here. This is a spreadsheet of every trade that we've taken in Trading Zone Live, right?
Okay.
In like great details. But I want to show you guys something interesting, something really interesting. This is the equity curve. This equity curve, this is not using any leveraged assets. This is
Okay.
just using the SPY. In other words, buy the SPY here, sell the SPY there, buy the
Hmm.
SPY. You could do this with one share. You could do this with 1 million shares. I mean, it's the SPY. I mean, you know. Um, so I wanted to see how the numbers look, not after 5 or 10 or 20, but I wanted to get a real statistical significance in there.
Hmm.
So we got up to about 233. Should have done this a little earlier, but I wanted to wait. Just kind of wanted to see what would happen. So we started this with a nominal amount. I could have started this with anything. I could have started this with $5 if I mean not with $5, but I could have started this with a couple of $100 if I wanted to. But we started with $10,000 just to show. And the account basically don't look at our starting number. Look at the rate of return. That's the key here because whatever the number we started with, it would have ended up being 3. There's no compounding here.
Okay.
There's no compounding here. There's zero bet sizing here, okay? I didn't want to get so and yes, I would definitely bet size, okay? There's no bet sizing here at all. At all. So we don't increase as we get higher, not using any of that, and I'm not using any leverage. So the only way this can go is up, okay? First off, we started with 10K, almost hit 30K, somewhere between flirting with 30, 28K. Last I checked, that's 180% return. By the way, Raleigh, you know how long it took us to get to these 230 trades?
Oh, tell us.
Since April.
Oh my gosh. So
Since
this is just
April.
since April. All
This is
right.
since April. This is since April. This is us taking every trade that's in the Telegram channel, which we write down the entry and the exit, just like we do in the Telegram channel, and we post it in. So, do you guys know anybody that almost tripled their account in the last trading the SPY or trading the options or trading the E-mini? Now, if you did this with E-minis, just so you know, if you did this with E-minis, you could. Now, I'm going to go real. I'm going to just. This is all theory. This is all education. This is all theory. I'm not suggesting that you do this, but I want to show you guys something interesting. Matt didn't even show me this. I just caught this with my own eye on the sheet. Where is it? Where's that damn sheet? Here it is.
The damn
So,
sheet folder.
and we're going to be putting this into Trading Sync this week. Flo, our German friend, is going to do that. But notice this: if you use the micro E-mini, is that the margin requirement, or is that how much you would have made, Matt? Right here. This is net profit in S&P points, right?
That's
What is this?
hold on. I want to be sure of the math before I tell you.
It's D3 plus 5. D3 right here times 5. Yeah, $5 a point. 358 times the point.
Okay.
So this is how much you would have made this is without any leverage or anything. This is just S&P points. Now, folks, can anybody tell me? I'm going to open up the chat for just 1 second. If you go to a commodity broker, let's just pick a random one, AMP Futures, okay? I'm just picking a random one. Just wanted to show you guys something interesting. What's the margin for micro E-mini S&P? What does this say?
$40.
$40, right? And $400 for the regular. Okay?
Mm-hmm.
Okay. Okay, so let's take $1,794.90. Matt, do you have a calculator?
I do have a calculator.
Why don't you take 1790 and divide it by 40? Because that's what, according to this, your margin would be, right? Not according to me, according to AMP Futures, right? And that's the gain. And this is just according to the points we've collected from every trade that's accounted in the Telegram channel. I encourage every one of you to go back and do the forensic accounting yourself, or I'll gladly send you this. Okay? Not hiding anything here. So, Matt, what is this divided into? 40?
44.75.
Are you telling me you would have made 44 times your initial deposit?
Yep.
So let me get this straight. Let me just make sure I'm not stupid. So you're telling me that you could have put $40 in, right? And that's your one contract gain. That's just $5 right here. That's 44 times your money. Is that correct?
Yes.
Okay. Anybody have a complaint with this? Anybody have a problem here? That's 44 times your money. That's using leverage. That's 44 times your money. Okay? 44.75. Thank you, Wild Ranger. If you want to use leverage. If you don't want to use leverage, then you got 3 times your money. If you want to use leverage, you got 44 times your money. Do you folks, do you think that gives you enough leverage, or maybe that's not good enough? No? Okay. All right. Now, my friends, if you don't believe this, I'll send it to you. If you don't believe this, compare this with the numbers in, compare this with numbers that are in the, right here. Every one of these is accounted for right here in this channel. Every one of these numbers right here, your entry and your exit. And this is since April. So how do you like them apples? How do you like them apples? It's pretty damn good, huh?
Yeah, it's excellent, Roger.
Does it get better? Now, here's the problem, guys. Yeah, when you guys send Matt an email, he'll send it to you. But I'd rather you wait till we put it into Trading Sync. We're going to put it into Trading Sync. Yes, Marky Mark. I'm talking about those trades. So, do you know how many times I've gotten an email saying, "What is Matt doing today? How are we going to do?" And then I look at the numbers, and the numbers look beautiful. And here they are. That's 44 times the return. That's 44 times the return if you're using E-minis. And that's 3 times the return if you're just trading the SPY. I can live with that really, really well. Since April, that's over 200 and something trades. That's the equity curve. So, and let me share the punchline with you. And now let's get into today's session. Roger, how come I'm not having those results? I know why you're not having those results. I know exactly why you're not having the results. And you know why you're not having those results. You know why? Can anybody guess? Let's see how smart everybody here is. Let me give you a big clue. It has to do with the biggest problem. Wow, we didn't have to wait very long.
Yeah.
You guys got them all. You guys got them all yes. I love it. I love when the plan comes together. Okay. No, Catherine, it has nothing to do with being smart as me. That's the beauty here. It has nothing to do with that. And if you think that's what it is, then you're just taking a cop out. It has to do with emotions. It has to do with emotions. It has to do with emotions, folks. I wanted to prove it to you. I didn't just want to keep talking about it. I wanted to prove it to you. Paul, everything everybody's asking me about E-minis, I've explained a million times, and I'm going to explain again at a webinar that I'm going to do in about 45 minutes. But let me just open up. It's not fair for me not to have YouTube here. But I wanted you guys to see for yourself, and I'm going to close the chat in a second. I just wanted to get the response. This is Matt. This is Trading Zone Live. This is Trading Zone Live. This is the signal service where we give you alerts for the SPY. And I wanted to see after, don't you think I should take some accountability and see how well we've been doing? Or should we just keep like going da 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 da? Yeah, we're doing great. We're doing great. How about some accountability? Well, I took some accountability. And let me tell you, the accountability looks beautiful. Okay. So,
Yep.
am I sharing my screen? Yeah, I'm
Yeah,
sharing my
we can
screen.
see your screen, and that's great. You just gave everybody a little teaser as to how you can day trade on a very, very small account.
Yes. So yes, I did. And I'm going to talk about this in great detail today. Okay. But I wanted you guys to understand where the problem lies. Do you guys remember somebody around here said that you need to understand that the best loser wins?
Yeah.
99.9 of you, some of you took every trade. Most of you did not take every trade because you were second guessing Matt. And that's how the ball worked out. I told you the biggest problem is going to, in your trading success, especially when you're day trading because things are moving very fast, is going to be you. Yes, you. You're going to be the biggest enemy to your success. See, I love numbers. I love numbers. You know why? Because numbers don't lie. Emotions lie. Numbers don't lie. Okay. So, how do you get past that? So let me tell you what we're going to talk about today. Let me just get to I really wanted to show you that, to show you how amazingly well we've been, not how well we've been doing, how amazingly well we've been doing. Now, I'm going to tell you why most folks find it very, very difficult psychologically to day trade. And by the way, that $10,000, I just picked a random number. It wasn't because I just said, let's just start with 10 so we could see how, easy to multiply. It wasn't because of any specific reason. Okay. The examples I showed you. All right. I'm not going to answer any questions. I've already answered that. I'll show you the thing again. If you guys weren't here or weren't paying attention, all of that was done on the SPY. If you did it on the E-mini, we collected 1,740 points. 1,740 points divided by the margin of E-mini, which is $40, day trading margin, and they're all day trades, is over, what do we say, 40 times your return?
Yeah.
Okay, so if you wanted to trade a leveraged asset, you would have made 40 times on your money. If you traded a non-leveraged asset, the SPY, you would have made almost 3 times your money. All of this happened since April. This is not pre-recorded. This is all live.
And Roger, just think a little bit about what's happened in the market since April.
Oh, it's been a holy mess. It's been yeah, I don't even want to say that. Like I'm not trying to use that as an excuse, but it's been a shit show. It's been I mean, think about, first of all, April through June, every other minute Trump announcements during market hours. That did not do us any favors, okay? And then we've had a lot of divergence. All right. It's okay. I don't mind repeating it. I just want to make sure people are paying attention and listening to this because this is really important. So I'm going to explain to you why. So, okay. So I want to give you guys a good lesson here, a really good lesson. Okay. Please listen to me. Okay. If you want to become really good position traders, try swing trading and be an okay swing trader. If you're an okay swing trader, you'll be an amazing position trader. If you want to be an amazing swing trader, you can be. If you're a decent day trader, you'll be an amazing swing trader. If you want to be an amazing day trader, you got to be an amazing scalper. Point is this: and folks, I want you to really understand where I'm going to right now, because what I'm talking about right now is the difference between somebody who's struggling and somebody who's on this side and somebody who's on this side. That's what we're talking about right now. And I'm talking about the 95% of all the reasons why. Everything else is 5%. So if you thought that something could be important, this is about as important as it's going to get to you. So please listen to what I'm telling you. This is the big stuff, the big stuff that really makes all the difference. Okay? When you are trading, your mind in terms of trading is used to a certain amount of stress. Okay. Basically, you trade once a week or you trade once a year, or you have one or two positions on, or you have your investment portfolio, all that stuff. It's all great. And your mind is used to that. Okay. It's exactly the same thing. Okay. It's just like working out. Okay. You bench, right? And you bench and you can bench 150 pounds. All of a sudden, somebody puts an extra 10 pounds on you, right? You bench your body, not you, your body says to itself, I'm not used to this stress. I have to adapt to it. And your body starts breaking down and then recuperating, and then you can handle more of that weight. That's the very basic progression of how muscles work, okay? If you don't like muscles or bodybuilding, a callus. You ever play guitar? You get calluses on your fingers, right? I played guitar professionally for many, many years. Um, fingers, calluses, okay? Calluses. If you switch strings to heavier strings, you're gonna have your calluses you're gonna get torn apart a little bit. You're gonna start feeling it because your body, your fingers are gonna say to your subconscious, "Hey, what is that? I'm not used to that," and your body has to adapt. Okay. So Paul, you understand exactly what I'm talking about with pick your calluses to a level that you usually do. Nothing will happen. But you put an extra 1% of stress on that callus, it will start bleeding. That's just how we are as people. That's how our bodies work. Okay. Yeah. When I was young, I used to really, I still play. I'm just not, obviously I don't do it for anything, but I used to really be into music. I still am really into music, but I just don't, that's not a way I make a living. But I love music. I used to be in bands when I was a kid, all that stuff, all the fun stuff. Me and my buddy were actually thinking of putting together a band here, just for ourselves, just to have fun, not to make money. But anyway, a lot of folks do that. I'm not the only one. Trust me. Everybody does that. So anyway, you guys, most of you know what I'm talking. Or if you're a gymnast, or if you're used to driving a car 60 miles per hour, if somebody puts a car 70 miles per hour, it's going to start freaking you out. I'm telling you, that's just how we are built. That's how our bodies are built. So when you start juggling all of these trades and all of these positions, your mind doesn't know what to do with itself, and you start freaking out. Okay? That feeling of freaking out manifests itself on other areas of your life. Sending me a nasty email, getting a refund, joining a different trading service, basically making a stupid decision because your body is giving you a reaction that's not real. But that's what you do. You're people. I'm not going to change you. I'm not going to change you. I just wanted you to recognize all this. So, and then you do a lot of other things. You kick the cat, you're mean to your wife, whatever. I'm making all this stuff up, but you guys know what I'm talking about. You're in a bad mood. You don't have a lot of fun because you're losing control. You're losing control. I know I'm right because I've been only doing this for 31 years. So the reason you're doing this, the reason you're behaving this way, the reason you're in a bad mood, the reason you don't want to trade anymore, all of that is because you're not used to that stress. Now, it's really a lot for a lot of people, which is why I say to day trade, paper trade when you're first starting out, and not try to make money. Get your psyche to adapt to a point where your psyche is military grade. You become a cyborg. Once you become a cyborg, once you accept that the next 20 trades may be losers, I mean, really accept it deep in your psyche, all of this stuff that's going on will have no impact on you. Zero impact on you. When I go home, my wife has no idea if I made money or lost money that day. She has no clue. Like you wouldn't be able to know it. Good man, Omar. Very smart. And I hope you feel better. Omar had a fall. He broke his rib and his wrist. Safe, fast recovery. Folks, I'm going to explain something to you. There's no way you can learn this battlefield tested approach I'm talking about unless you're in the trenches. But what happens is this. You get into the trenches before being prepared psychologically to be in the trenches. And then as soon as the first grenade hits, you're like this inside your mind. And then again, and then you're off to the races with your reaction, with the way you react. Okay? My point to you is this. If you were to do this every single day, 10 times a day, and get into a routine, it would become second nature. Your heartbeat would not beat faster. Your hands will not get sweaty. You will be able to think extremely rationally and not make stupid decisions after one or two or three trades. Now, I'm saying this with a very, very high degree of authority because what I'm telling you right now, it's not something I think I know. It's something I know better than I know myself and my family, okay? I mean, this is how it works. This is the core of psyche. So, the way you do it is you do it very slowly. You don't jump into a cold water pool immediately. You don't walk into a boiling water immediately. You do little by little. You get used to it. And then when you get used to it, it doesn't seem like a big deal. If you don't do what I tell you to do, if you don't go through this routine, you're just going to end up hurting. It's going to be walking up the stairs and falling down with your mind. The hormones, the all that stuff that's released in your mind, it's very, very negative, and it goes into your subconscious. Mm-hmm. And it becomes what we know is called the post-traumatic stress disorder. Have you ever seen people function with post-traumatic stress? They jeopardize themselves. They jeopardize those around them. They need serious help. There's people in the I know a family who has a son. He can't stop drinking alcohol because of what happened. I mean, this is not funny. It's really sad, but post-traumatic, this is what bad trading can cause you. Yes, it is. If you understand what I'm talking about, Wild Ranger, this discussion is definitely worth the price of admission. But a lot of people, they just can't get it. They can't get it because they're in that rush. They're always in that rush. So please, folks, take a step back and stop letting the next trade dictate what you do. For the first time, I wanted to take a look at the performance, and my jaw dropped, okay, at how good the performance is. I mean, this is really good stuff here. So, folks, stop the madness and start following the rules. Okay. So let's talk about what Trading Zone Live is and what indicators we use, okay? So Trading Zone Live is a day trading program, evidently a very successful one from what I've seen in the last couple of months. Actually better than I expected. And what we do is we use a combination of Alpha Zone Pro, that's this day trading tool that I created. It has a momentum oscillator and it has key levels. We combine this right here with market internals. Yes, that's exactly what Glenn is just saying. You have to be in the now. In the now. There was a time in my life where which actually led me to getting into this business, not into trading, but getting into this business. I was in a huge lawsuit with an ex-partner years ago. I've told all these stories to you guys. We've spent hours talking about this. And I remember when I was under a lot of stress, my mind would go automatically into think 1 hour ahead. Don't think about what happened an hour back. Don't think about what's going to happen tonight. Think 1 hour. Stay zoned. That got me through some really tough times. And I'm telling you, you have to start living in the now. If you can't live in the now, it's going to be very, very hard for you to move forward because you're always going to be thinking about you're always going to be trading in the past or trading in the future. It's a very, very slippery slope, and it's a very, very dangerous road. Hold on a second. I don't want to stay in this trade anymore. 1 second.
You know, it's interesting, Roger. I was just going to feed some comments here. Several years ago, I used to run a day trading room for Infinity Futures. And, the things that I would see there, getting back to the psychology and being prepared to day trade, is the thing that I saw most often is that people were not trading with risk capital. So, number one, they were playing with scared capital. Number two, they constantly cut their winners short and refused to get out of losing positions. Okay. And it just wrecked them. So if you're playing with scared capital, let's start with that. Okay. And you're not prepared to let the strategy work. In other words, take the proper levels, the wins. And if you are just refuse to cut your losses, people hate to admit they're wrong. If you're, and I'm talking futures, Rogers, because options give you a little bit more advantages. But as you know, in the futures markets, there's a time when you got the direction right, but it retraces against you and you get stopped out.
Right. That is correct. By the way, we gave a trade this morning. Raleigh, one of the stocks we gave, ARBB, at 1070. It
yes.
went up to about $14.
Yeah.
Let me just take a quick look at all of them real quick, and then we continue just for fun of it.
It was the only one, Raj.
Oh, okay, cool. Thanks.
Yeah,
save me some
time. I brought it up
time.
here because I was always interested, and I was going like, yeah, ARBB. At one point in time, it was up 1389, Raj.
Yeah. Thanks. I appreciate that. Okay. All right, folks. And honestly, folks, what you see here in this room, this is real stuff, like gloves off. I don't want to sugarcoat anything. I want to be real with you. Because you can't succeed. And no, somebody said, well, we're not as smart as you. No. Smartness has nothing to do with it. Do you guys remember what I told you? The best trader I've ever had in my life was a roofer. He was a smart guy. I mean, he was no dummy, but he was no Kevin Hassett or Charles Calamir's. You know what I'm saying? He was no head of the Fed. He was a roofer. He was a nice guy, very nice guy. He was the best trader I knew in my life. He was a roofer. So intelligence is not the key. Emotional intelligence is the key. Emotional intelligence. Okay. So let's talk a little bit about Trading Zone Live, and let me explain to you what Trading Zone Live is and why it's really, really cool. So Trading Zone Live is where Matt is. You notice Matt is watching the market all day, like he literally comes in the morning and he's watching the market from 9:30 in the morning till 4 o'clock in the afternoon. And what he's looking at is a couple of different things. What he's looking at is he's looking to see how the SPY behaves near key levels. These are, again, this is called AZP. This is what Bugs uses to make money from the market. Matt uses this too. This is a tool I created. It's called AutoZone Pro. And it has max move Pro. Excuse me, AlphaZone Pro. What did I say?
AutoZone. But that was on your mind earlier today.
It was. It still is. I really like that stock. Yeah. I was telling people this morning, AutoZone. People are always thinking Nvidia. Go back on a 50-year chart of AutoZone, and it'll blow your mind. Go look 50 years back on Domino's Pizza and AutoZone. You will poop yourself. I'm not kidding. If you think Nvidia is a high flyer, take a look at AZN and Domino's Pizza. You guys will not believe what you see, but go back 40 years. Okay, so going back to Trading Zone Live. Yeah, he gives longs and shorts. Yes, Freudian slipped. Exactly. So these levels are telling us where we should be engaging near, okay? So here, we're shorting around here, and we're buying around here. Here, we don't do anything around here. Well, most of the time, but these are the main levels right here. So if we're up here, we want to start shorting. If we're up here, we want to start buying. We combine that with the Master Blaster of Disaster. Yes, Master Blaster Disaster. That's the real name of it.
Best name ever.
Oh, by the way, I want to see how the shirt, Carlos got me this shirt, and I want to see it's green here, and I wanted to see how it looks. So the green starts looking like the background. Okay, so I can wear my green shirts here. All right, cool. Folks, charts. The money is in the charts. All right, just FYI. All right, thank you again, Carlos. Great shirt. So we're looking at these lines to see how everything can engage. That's cool. Thank you, Rihanna. All right, see how we're engaging. And then we're looking to see how momentum is. So, for example, let me give you a really good example. Let's say we're looking for a short because we're either here, or here, okay? Well, obviously, if I'm looking for a short, I'm going to want this to start coming down. I wouldn't be buying a short when this is starting to turn up from here, obviously. When we start getting higher, we would short when we're starting to get a little closer to the downside. Okay? So so if we see price peaking out around here, and if I see this peaking out around here, that would be a really good inclination to take a short. But there's more. The other thing that Matt looks all day is these things right here, market internals. Now, just so you know, this is just the SPY, okay? There's nothing secretive here about this. There's nothing secret about any of these. They're just market internals. But we have the bond market here on a 5-minute. We have the VIX here. We have the SPY here. We have the ADD here. I look at this a lot. We have the Volt here, and we have the tick here. So let me explain to you guys how this works together with Ken. Have a great one, okay? I'll see you soon, Ken. Thank you for being here.
Hi, Ken.
So let me show you how all of these work together with this. So right now we got a short signal, right? And I have no idea if Matt's doing something or not. So don't assume I'm giving you a short signal. I'm just teaching, okay? Everything we're doing here is for educational purposes only. Please, if this is not an alert service, okay? So you see how right here, how this just gave us a short signal. You could put this a little back too, but you could see it right here. It's a short signal. So what would I look for? Well, the first thing I would look for something like this. This would actually tell me, yeah, that you're a little overextended right now to the upside in the short term based on a 5-minute basis. So there's a good chance that there's something here. But that's just the beginning of our analysis. What else would I look at? Well, I'm going to want to look at ADD. This is really important. And actually, to be honest with you, the more I look at it, the more important it becomes. And let me explain to you why. Here, let me, here, I got it. I'm just going to do a little screenshot here. I want to show you why this is really important. Do you guys remember about 2 weeks ago, I had a session here and I talked about market rhythm, right? I talked about market rhythm. And I explained to you that sometimes markets do this and sometimes markets do this. This is lack of rhythm. This is rhythm. Think of a basketball going up and down. Rhythm. In order to have rhythm, you have to have energy. Okay. So how does this get involved with this? This is telling me how many stocks are above or below yesterday's closing price. Now, if you don't have a lot of stocks trading above or below yesterday's price, your rhythm is not going to be that high. Because think about this. When stocks just open flat, they kind of stay flat. And when stocks open higher or lower, they kind of move. So this is telling me what we're dealing with. Now, today, we opened up at 567, which means few stocks were above yesterday's high. Then we went to negative 1182, which said a lot of stocks are moving from being above yesterday's high, or some stocks, to below yesterday's low. That tells me right here, this right here told me that the market has energy today, but it also told me that the market is not directional. Why is that? Because when this number is not negative 12 to 1500, it's telling me that they're not sustaining. They're opening higher or opening lower, but they're not moving. We're not having a gap and go. A gap and go is this. Let's say price is here. It opens here and then it continues. That's a gap and go. Today, what you saw was this. A little baby gap and then because we went from positive 567 to negative almost 1200. So you saw the market in the morning opening a little higher and pow, coming right back down. And now coming back. So there's definitely energy. There's movement in the market. So this is telling us this. Is there going to be energy in the market? Now, folks, let's stick to this, not NVIDIA. This is more important than NVIDIA. This is the whole market. Then you have the VOLD. Now, this is really important. This is telling us if volume is coming into stocks that are moving higher or lower. And right now, it's diverging from the SPY. And right now, it's telling us that actually volume is coming into stocks that are moving lower, not higher. And as Richard will tell you, it's not 99.9% of the time, but more often than not, this will start coming back here. So sometimes you have the perfect storm. You have overbought market environment. You have oscillator that's overextended. You have divergence between VOLD and SPY favoring the downside, which we are right now. The only problem we have right now is the number of stocks in the ADD is increasing, not declining, and VIX is getting lower. Okay? Also, TLT is moving higher. Okay? So we look, and this is telling you how aggressive the move is right now. So if you're looking at a candle on a SPY and the candle is getting bigger, this tells you if there's any juice behind it, if there's any real meat behind it or not, or if it's just a solo candle. So when you use these separately, this you could use separately without anything and you can get away with it. But this is really important to determine if the market has energy and if the market is going to have rhythm and if the market's going to have directional rhythm or not. So for example, if this was at negative 1400, I would be looking for a trend day to the downside. But because this went to 1180 and now it's a negative, this is just turning into a chop chop suey. Chop chop suey doesn't mean a move up. So again, and we look at this all day long, and Matt is literally looking at it like this. As you could see, he's literally looking at this all day long to make a decision if we have an edge in the way we're moving things, which is really, really cool. And as a result, as I showed you, we've been able to achieve this equity curve. And again, this is simply taking every trade that we posted in the Telegram channel, which every member has, highlighted it on an Excel spreadsheet, and posted it for you. You could have started this with $1,000. You could have started this with $5,000. Don't use this as leverage. Just look at how much we were able to increase and look at the quality of the. Notice something interesting. We moved here from 10K to over 25K, but look at how much we gave back. We gave back not half of it, only a quarter of it. Then we went back here and we went up. Notice something interesting. It doesn't give up a lot of equity. That's huge. Also notice something crazy. It doesn't go up and down a lot. It's very, very good. That's the kind of trend you want. Now, the next time I'm going to show you this, it's going to be in a trading view format. And then what Matt and I will do is we're going to start analyzing and seeing, hey, this is the computer's going to be telling us, like, hey, watch your trades before 10 o'clock on Tuesday. You have more cluster of losers. I'm making this up. Or watch your trades at the end of the day. That's what the trading sync will give us. But at least right now, we have a real good idea, or not idea, we have a really good track record of how we're doing on a non-leveraged asset. And that to me, folks, is amazing. So if you and I'm gonna talk about Trading Zone Live extensively. Let's just answer some more questions. Oh yeah. So a lot of you were asking me about E-minis, so I want to answer that, okay? And again, this is just an education session. I'm not applying this to anything. I'm not telling you to buy anything at the market. I'm just teaching you general rules. This is very general rules, okay? When you're day trading, a lot of you are worried because you have the day trading margin requirement, okay? Well, as you know, to be a day trader, you need to have $25,000 if you're going to trade equity products, okay? Futures are not equity products. And again, I'm trying to be very general and just educate you here. Futures are not stock options. They're futures. They don't have a $25,000 requirement. And more often than not, folks who day trade the alpha zone or trading Trading Zone or Alpha Zone. What am I saying? Alpha. What am I doing? I'm losing my mind again, Matt. Most of the folks that trade Trading Zone Live, what they do is they use the E-mini or they use options. Options are very, very simple. You do 0 DTE options or 1-day expiry options. And again, we're going to talk in detail about all of this in a minute. And I'm going to show you a lot of examples, but time-stamped examples. But first, I wanted to explain this to you. So futures don't have margin requirements. Now, you can buy options on futures, but that's not what we're talking about. You don't need options on futures, just the futures. There's the micro E-mini, that's $5 a point. And then there's the E-mini, which is $50 a point. And the margin for micro E-mini is, the minimum exchange margin is, this is set by the exchange, is $40. And the minimum exchange margin for the mini is $400. So if you have $400, you could trade a contract of the E-mini, and you could do it 100 times a day. It's designed to be traded. It's not an investment asset. So you could do that very, 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 very simple. Okay? Very, 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 very simple. Okay? Also, you could do the QQQs that way as well. There's futures for the QQQs as well. Okay? So, what amount per trade? Well, that's what I was just saying. Ambrose. The amount per trade is, you started with 10K. Do you use 25? I don't think you're following along. You need to rewatch this video, Ambrose. I explained. Okay, so I'm going to answer this question again for everybody, because you're asking me 5 different questions. So I'm going to answer this question. This is the question we're going to answer right now. It's confusing, but I'll answer it for you right now. When we created this spreadsheet, right here, I started with $10,000. I could have started with $1,000. I could have started with $2,000. I could have started with $500. The purpose of this was not to show you how much money we could make if we started with $10,000. The purpose of this was to show you how much the account increased and the equity curve. So that answers your question, Ambrose, as far as the account size. Number 2, how big each trade is will determine by the asset that you choose to use. So let me give you a couple of choices now. You can go to a company like AMP Futures, hypothetically speaking, or any other futures broker. And if you're trading the micro E-mini, you don't need $10,000. Ambrose, you don't need $10,000. You need $40 micro E-mini S&P margin. If you're trading the mini S&P, you're not going to need $40. You're going to need $400. If you're trading the option on this SPY, you're going to need about $200 to $300, which is how much each option costs on average. If you're trading the SPY, then you're going to need a massive account because you're going to be trading the SPY underlying. So to give you an answer to what Ambrose is asking is, I just gave you 4 answers, and it all depends on the path you take. $40, $400, $300 to $400 per option. And then if you want to trade the SPY, well, you could trade the SPY, the ticker symbol SPY right here, $666 right there. So what is the incentive to trade futures? Great question, Cyrus. Let me show you the incentive to trade futures. That's a great question. I answered that question earlier, but Cyrus must have missed it. So I'll show you again the incentive. Here's the incentive, Cyrus. You would have made on one contract 358 E-mini ES points. E-mini, micro E-mini is, survey says, $40 per contract. How do we know that? Because the AMP Futures is telling us that. What happens, Cyrus, when you divide $40 into $1,790, Cyrus? Yeah, Becky, you shouldn't be using TOS for them. I've mentioned that only 100 times between April and now. I told you margin is high for using Thinkorswim for futures because they're not a futures broker. They're a stock broker. You got to use a futures broker for futures. That'll be our little secret, okay? unless you want to get ripped off. So Cyrus, what happens when you take $1,790 and divide it into 40? You started this conversation, Cyrus. I'm going to make you do the math. Does anybody want to tell me dividing? Can anybody do the simple math? Cyrus asked a good question. We need to give him an answer. 40 to 45. So Cyrus, how many times did you make your money per contract? If you're trading E-mini. Cyrus made 44.75 times his money. But you would have, Cyrus, if you followed Uncle Roger's rules. So Cyrus, the benefit of trading E-minis is you get crazy ass leverage. Where you could trade a contract for $40. And you made $1,790. If you traded a mini with $400 margin, you would have made $17,900 per margin, according to every trade we accounted for. Okay? So do you guys now understand what the benefit of trading an E-mini is? You made 44. If you traded the underlying, you would have made 2.7 times your money. If you traded the E-mini, you would have only made 44 times your money. That's the difference. Anybody need an explanation? Does anybody need an explanation on that? Kurt, I've answered this question already 4 times today. I've answered that question. Can somebody answer Kurt's question?
I don't think the room sees that. Kurt
okay,
says,
I'm going to post it. Kurt, every question you guys are asking, I've already answered several times. Okay? Futures, not the option. I said you don't have to do the option on the E-mini, just the future. You get more leverage and more liquidity on the future. If you want to do the option, you do the option on the SPY, and that'll cost you about $300. Okay? Yeah, just the actual futures, the micro, if that's the way you want to go. I'm not telling you what to do. I'm just saying you could go route A. So let me give you 2 scenarios. I have $1 million account. My ass is just going to trade futures. My ass is just going to trade SPYs. I'm just going to trade the SPY. What do I care about it? I have a huge $500,000 account. What am I going to trade? I'm going to just trade the SPY. It's only $666 a share. Let's say I have a $10,000 account. I'll probably trade SPY options. I have a small account. I'm probably going to go to AM Futures and take advantage of the $100 minimum deposit to get started and start trading $40 micros. Yes. There's no day trading restrictions with this, okay? And by the way, it's not just AMP futures. I'm not signaling them out. All I'm doing is just going here. Futures, brokers. And you can find one yourself if that's how you choose to go.
Yeah, to Sean's question, there is no time decay when you're trading futures. You are not dealing with an option with an expiration date.
Okay, there's none of that stuff. And you don't have to worry about settlement. You don't have to worry about any of that stuff. You don't have to worry about any of those things you guys are talking about. What percentage of your capital is risk per trade? Again, as I said, it depends on, it depends. Well, I can answer that question in another way. I think since we've been doing this and I've been following Matt's trades, the majority of his exits are about 1 point. I would say the average is 1 point. That's $40 or $400, depending on what you're trading. Once I saw him do a 2-point exit when the volatility was really crazy, but I think he does usually about 1. Am I right, Matt? Average loser is about 1 point, right? Yeah.
No, 10 points. Yeah. $1.
$1. Yeah. We're saying the same thing. So $40 if you want to go that route. If you wanted to go that route. But yeah, there's none. You don't have to worry about any of that stuff. Bill says, with E-Trade futures, does your account have to be $25,000? I've already answered that question. Oh, that's a great question. How many losing trades have we had in a row, Matt? That's a great question, Alex. So why don't we see? I like that question. It's a great question. Thank you for that. Matt, you're on the clock. That's a good question, Alex. And how many winners we've had, too. Let's see. Matt's pretty good with this sheet. That's a good question. Yes, thank you, Jill. There's also a major tax advantage to futures. You're taxed 60-40. Capital gains, 60-40, not 100% as you are in stocks. Let me just take a look at something here.
While Roger's doing that, guys, futures trade in ticks. So for the E-mini S&P or the micro E-mini S&P, it's 4 ticks per point. So every tick it moves on the micro E-minis, it's $1.25. If you're
And
going, yeah,
David is asking if you could trade futures in an IRA account. What do you guys think? No problemo.
It's like 3.
3 losers in a row?
Yeah, it's our biggest.
And what about winners in a row? That's a good question. That's a good question. 3 losers in a row. Tammy says 13 winners in a row. Ooh, let's see. Would you tell us, Matt? I'd love to know. I'd love to know.
I'll answer some other questions that come up,
Yes.
Roger. Kathy
Yes,
says,
please.
can you hold futures overnight? You can, but your margin requirement goes up.
Yeah. You're going to go from day trading margin to overnight margin.
Overnight margin, and that can be significantly higher.
Let me see what overnight margin on E-mini right now. Let's see what it is.
Yep, it's 13.
Wow. Woo. So we've had 3 losers. So let me get this straight. Overnight margin on E-mini. Oh, what is it? It always switches around here. Come on, where is it? Here, futures calculator margin list right here. Right micro. If it's 2,400 over. Oh, I see what Thinkorswim does. See, Raleigh, I just figured out what Thinkorswim does. Thinkorswim doesn't charge. They just charge you overnight margin straight up.
Straight up, as opposed
they just
to
straight up. Yeah, it's 24.55.
Okay.
So all Thinkorswim does is they just charge you overnight margin, overnight 2,400 for mini, and for 24,000 for E-mini. That's the $50 a point. That's the bigger one. You know, folks, when I started, it used to be 500. When Raleigh and I started, it used to be $500 a point.
Mm-hmm.
Then it became 250 a point.
Mm-hmm.
Then they made the E-minis, and then they made the micros.
And then the micros. Yep.
So I'm going to answer a few questions, kind of revise this a little bit, and then we're going to start something. And folks, I highly recommend, highly recommend that you pay very, very close attention, because everything I just went through, including individual trades, timestamps, all of that stuff, you know what I'm going to do? I'm going to go through it again with you. But this time we're going to do it from another perspective. Now, why should you pay attention to this? Before, I couldn't tell you why, because this was a new program. It wasn't a new because we did all those trades in the pit. But let me tell you why you should pay attention to this. You should pay attention to this because what I'm about to show you was able, in the worst case scenario, with absolutely no margin and no leverage, was able to make from almost 3 times return since April, with over 233 trades. If you used margin and leveraged, the return would have been 43.5 to 1. 43.5 to 1. Not according to my theory, according to GARP, but according to a spreadsheet that which we in with you guys in the members area put for every trade. Like, for example, right here. Every trade is accounted for. Every trade. Like, see, marked 659.30. Every trade is marked. So you should be doing this because the results have been amazing. If you want to use E-minis, your return would have been 43.5 to 1. We've had 13 winners in a row, and we've had 3 losers in a row since we've started in April. And everything I'm telling you right now is after taking a total of 224 trades, with every one of them being accounted for. So now that we've gone through that, let's go through this. And now you guys will have a much better perspective. And again, I'll go through futures here. I'll go over how you could take advantage of this, how you can get in on this, and how you could start hopefully making some money. Folks, profits and performance shown today are not typical. We're not going to make any future earnings claims.
Roger, just a quick point.
Yes.
We just need to let the YouTube folks know
Oh,
that
yes,
they need
Matt,
to come
would
into
you-
the Zoom room because
Yes.
we are going to be shutting the YouTube feed.
Will I? What?
YouTube.
I've already been doing it.
All right, he's on it.
All right.
Hefe, we're